Ready, set, rug pull. Oh, snap. We got a good episode today. I'm pretty pumped to talk about it. You're watching the Daily Stock Market Brief. My name's Michael Silva. I do these videos Monday through Friday. That's 5 days a week. We use technical analysis to get a good idea as to where the markets might be headed next. In today's video, we're going to be going over the indices. We're going to be going over some indicators. We're going to be going over commodities, the dollar, bonds, and then I'm going to wrap it up with a good conclusion. The conclusion section I'm pretty excited about because there's been a lot of comments coming out as of November, this big ramp. You're so bearish. Stocks only go up. Well, guess what? I'm going to show you my portfolio since November 1st, the percentage point gains. And then you might change your tune, but you probably won't because most of those people that talk like that don't even stay till the end of the video. I got a lot to talk about today. Let's get into it. Welcome back. What's up? All right. Fed meeting came out today. Markets didn't really move all too much. Nothing really new. No new news, really. It seemed just like a bunch of back and forth nonsense, struggling to answer handball, softball type questions. It's quite irritating, actually, hearing him talk about the housing market, how everything looks fine, and then climate change for some reason, how he read a canned response like he knew he was going to get asked that question. Jeez. I can go on and on about that, but that's not why we're here. We're here to look at the technicals, see what I see in the markets, because this helps us become better traders and investors. So let's just look at a market snapshot really quick. Dow, down for the day. NASDAQ, all-time high. Shoot. Pretty mixed across the board. Not too much gains, just a lot of chop back and forth. Interesting day over here in the sectors. What do you know? Utilities at the bottom. I guess that was an anomaly, right? It was one of the top performers yesterday. Now it's down here. We said, it seems kind of weird, kind of strange. Maybe it's an anomaly. And then what do you know? Down 1.16%. Meanwhile, energy was one of the top performers yesterday, too, as well. And it was one of the weaker ones here, but it was only down 0.49, so nothing crazy. Let's look at relative strength. Where's the relative strength coming in? Now, we're looking at various sectors compared to the SPY. This is important to know what's performing better or what could be potentially performing better so we can find out where we can place our money or look for individual stocks in those sectors. As you can see right here, the leading ones, we have industrials, financials, and communication services. But as you can see, the kind of tails are kind of wrapping around and kind of moving all around. Then you see energy, this big rip around to the corner here. Now we're looking at 13 weeks. The reason why we look at 13 weeks, 3 months-ish, right, is because a lot of intermediate term changes can take place there. And what we're seeing here is just an improving energy sector. And that one has been getting beaten down recently. Then also we've seen real estate getting beaten down really recently as well. And we're starting to see slight strength, but it's been kind of wrapping around here on a weekly basis. So something interesting. Now, what I want to show you is, let's look at international. This I find really interesting. We're comparing international to the SPX or the SPY. And you can see there's a lot of them performing very good comparatively to the SPY. So think of emerging markets, think of just individual regions here. You got Mexico or countries, Mexico, Austria, Spain. Now what I want to just point out is, I posted this on Twitter too, but Singapore down here, I really actually like that chart setup and the relative performance. And based off the relative performance, it still looks like it has a long way to catch up to meet its relative high from early 2019. So this could be a very strong performer. A lot of these actually are showing some possible really good performance potential. So my eyes are going to be on here. I'm going to be looking at individual international companies that make up these ETFs and potentially see if I can seek out any hidden treasures. Let's look at the S&P 500. All right, S&P 500. What do you know? We tapped at this previous all-time high pretty much perfectly. Wicked down a little bit, kind of somewhat of an inverted hammer, disconnected from the 5 EMA. Not much price action. So what can we expect here? Well, first off, we have an area of resistance and we have an area of support. If we break through the area of resistance, guess what? We'll probably shoot higher. Ta-da! Nothing new there. Okay, every time we get below the 5 EMA, which has been acting as support, it quickly rebounds. You can see that here, you can see that here, you can see that here. So that trend could continue, right? The trend is your friend until the end. It's a common saying on Wall Street. Now, this is a nice consolidation area. If this continues to consolidate, you can call this a bull flag. And then when we do get a breakout, if we do get a breakout, you want to wait for that confirmation and then you could buy into that. But I wouldn't trade before the breakout because you can easily just get rejected and come back down here. Now, when you come back down here, if we do, we have this gap that can act as support. We have this support right here, previous resistance, then becomes support. Then we have the 20-period moving average. So we got a lot of support down here. If we start breaking down through that, all right, let's start looking at 35.40, 35.50 range for the next area of support, or this lower Bollinger Band. So right around that range. Now, the title or the thumbnail said, the rug pull out or ready set, and I'll get into that in the conclusion section, why it could be potentially just the perfect setup for just a market anomaly to just take place out of nowhere, potentially this year or maybe just into next year. We still have definitely the potential of just having this holiday rally, Santa rally, whatever you want to call it, just continue this extension. But, we'll get into it. 15-minute time frame, 30-minute time frame, up channel, nothing's going on. It's literally been chopping back and forth, but we are putting in higher highs, higher lows. Up until recently, the higher highs has not been broken quite yet. Like, we need that to get above and keep rolling, going over. If we start breaking above this all-time high, I would start targeting 37.50. 37.50 would make sense for the next level as far as a target breakout. That could be a good trade. I'd like to take a second and just remind everybody to smash that thumbs up. That's a picture of me in 2 years. Dow Jones, let's get into it. Dow Jones has been coiling up consistently within this pattern. Rising wedge, not structurally sound on the move up. What's going on here? It's going to break to the upside or it's going to break to the downside. If we do break to the downside, we can probably move this lower trend a little bit lower now because the 20 period is right below it and it's been acting as support. If the 20 period gives way, then I think we could start heading lower to the lower Bollinger Band. I'd start looking at 29,400 to 29,500 as a target place for a pullback and then maybe a move higher. We got to play it, as time goes. If we start breaking above it, yeah, maybe we start getting some real big bursts of energy, but really it's just been consolidating sideways, struggling to make and hold an all-time high. And just look, hit the 5 EMA, up, down, a little bit more down, a little bit more up, gap up, down, up, little down. It's just chop. Market has no idea what to do yet. Maybe it was waiting for the Fed meeting. So maybe we're going to start actually seeing some momentum in a certain direction here. Still coiling up though. 30-minute time frame, rising wedge, still coiling up. Not much going on here, right? We broke down once, little false breakout. We came back in, but keep in mind, we're not making a new high yet. So that's a lower high. We have a lower low, but if we start breaking down through this 29,800, that's going to put in a lower low, which can signal a potential trend shift. Okay, it first takes lower highs and then you start building out lower lows. Very similar to this right here. We have higher lows, we have higher highs, everything's going good. But as soon as we start changing that pattern is when we start seeing the trend change, at least temporarily. Let's look at the Russell. Daily time frame, still rising wedge, tightly coiled up. Do you get the idea or why I'm saying the potential for a rug pull? This ain't consolidation. This is just continually drifting higher and higher and coiling tighter and tighter. That's not the greatest thing if you're trying to go long right now. What you want to see is just sideways movement and then breakouts from, a solid area of resistance. Because once you get that resistance becomes support, but we're not building any support. We're literally just drifting higher. Hey, but that can happen for a long time, right? We've literally been oversold on the RSI on the daily time frame since the beginning of December. Crazy. That's okay. Here's the 2-hour time frame. You can see the rising wedge. You can see just more of the gaps. You can just see how just tightly coiled and just how perfect this pattern is. Negative divergence on the RSI. So we're building out new highs, negative divergence. If this keeps on going up, we need to see it consolidate sideways at some point to know that it's safe to go long. But as I see it right now, when we look at longer term time frames, everything's pretty overextended. So from my point of view, things are on the sell side, or if you're going long, to just reduce position size and make sure that you have tight stop losses, because we know when the bears step up and they attack quite hard, meaning that the selling pressure is very aggressive. So if you try to go in somewhere and try to get rid of your order without a stop loss, there's a lot of I don't know what the word is. What's the word that I'm looking for when you lose, a certain amount per share. Slippage. There's a lot of slippage. There we go. If you don't have a stop loss, let's look at the NASDAQ 100. NASDAQ 100 is strong. We got that pullback, right, to that 12,200 area. We said that could be an area of support. Tagged it dang near perfectly. And then we're seeing it start ramp up. We have so much confusing candles right here. Yeah, they're moving higher and higher, but we had the bounce candle, inverted, hanging man, both negative, but then we see a continuation to the upside, pushing new highs. So maybe this is the breakout point to make even higher highs. Now, keep in mind, negative divergence on the RSI. If this wants to retrace, there's so much support down here, just like the other indices. This is the one index that I'll be probably keeping a very close eye on to buy the dips from. Notice how the 20 period is right here, so that can be an area of support. We have this previous support right there. We have the gap right there. So we're just surrounded by support, and it's a lot of momentum to the upside. So I personally would not even try to short this or even hedge with an NDX. Anything at all that I'd be doing with the NDX is positioning myself long on pullbacks. Then when we look at the 30-minute time frame, I pointed this out yesterday, rising wedge continued, right? The pink lines I put here because I just thought that was kind of just almost perfectly just the same. You just see these rip up higher, and then we broke down, and we're seeing this rip up higher. We saw a little breakdown, but then we had a Fed pump up here, and then we're starting to see a little bit of a red candle, negative divergence. Yeah, maybe we break down tomorrow. Maybe we don't. Maybe we continue this just relentless jam higher. And let's get into the indicators now, because I got a lot to talk about on the indicators. We're going to first look at the lumber to gold ratio, 13-week time frame. Somebody was like, why don't you just show them both? All right, fine, I'll show them both. Lumber to gold ratio. This is the rate of change on the 13-week. When it goes below 0, that is risk off. Clearly, we're not going to get there this year unless there's something dramatic happens. Very dramatic. So we're still risk on the 13-week. Okay, here's the ratio. Here's the rate of change. And then right here is the 3-week, which when on the interview with Michael Guyot, he said, you could use a 3-week, but just know that, you're going to be wrong more often. You might be right more often. And, you might potentially get ahead of the opportunity quicker than other people, but you're going to be going back and forth a lot more frequently. So I thought I'd show the lower time frame anyway, just to show you where it's headed. And it's been just diving lower. So probably within the next day or so, if this continues, we will see it drop below 0. But maybe not. Maybe it just rips right back up. So I just figured I'd show you guys that. Now let's look at the CPC, smooth over 10-period moving average. This is our sell signal, quote unquote, which just basically means be very careful. We hit this little double bottom here. We're starting to move up, consistently moving up. What I noticed here is when we hit this part and then we started moving up, we actually had some selling take place. Right now, we're not really having any selling take place. So maybe when we cross above the red line, which is the sell signal, we'll start to see some selling take place. Now, that does not mean short the market, but what that does mean is, protect yourself from downside potential. Have your stops in place, maybe take some profits or reduce your positioning size. Now let's look at the VIX. VIX didn't do much today, right? We had a little jam session up higher, tagged the upper Bollinger Band or right around there, and then we closed where we basically opened, down, 0.39. Maybe this move continues. Yesterday we said, hey, I can see how there can be some very big wigs looking to see about hedging this down to around 19 to 20. That would make sense to me because that is a very possible move. We came down here to lower, we came up, tagged up a little bit top, kind of some long upper wicks. That would make sense to come back down to this range. But it's also possible that this falling wedge breakout continues. So we got to be mindful of that. Got to be mindful. RSI is at 46.25. Still hasn't broke down through this yet. So we kind of curled up. Maybe we're just taking a little breath, shoot higher, or maybe we're just coming back down. It's hard to say. Overall breadth of the market, though, negative today. Not the greatest. Even yesterday, we were up a little bit stronger. But, that's weak for, hitting an all-time high or coming close to an all-time high. This is some weak breadth in the market. Speaking of weakness, remember this one? Remember we talked about this a couple market briefs ago? We showed the negative divergence on the null. This is the new high, new high, new low. That's hard to say. Index. You can see when we had a negative divergence when the market made a new high, we saw that down pull, the COVID little pullback there. But now what we're seeing is we really hit that high peak just the other day. And now what we're seeing is a new high on the NASDAQ on a lower reading on the index. That's a negative divergence. But we'll see how this plays out because the NASDAQ during the tech boom, what's very noticeable that I've noticed, and I should have brought up a chart for it, but you saw this moment of consolidation for quite some time in the middle of December, and then you saw a big Santa Claus rally towards the end of the year. And maybe that's what we're seeing here. So maybe that continues. But we'll see what happens here on the breadth of the market. And then we got the high low, still jammed up, 98.43. It's just right in the high. If this starts turning over, maybe that's going to signal something. Then we got the fast stochastic for the summation index on the NYSE. Starting to kind of curl over here, maxed over bought, and we're kind of just curling itself over. Now, this could remain like this for quite some time. Weeks, months. So keep that in mind. But when you start heading down sharply lower, we've seen some pretty aggressive sell-offs. Let's look at commodities. Commodities. Oh, Nelly. This, to me, is interesting. Now, pay close attention. Gold. What happened today? We came up here, tagged the upper trend line, not quite to the 50, but then we started reversing it a little bit, okay? That's a bearish doji star. Strong day, gap up, showing weakness. So, what does this mean? Are we going to get rejected and head lower? Maybe. Or are we going to break out higher? Well, we have to get above this, and we need confirmation before going in. So, don't get excited about this green day. All right? And once we get into the dollar chart, you might really consider pumping the brakes. Silver, 3-bar breakout. Up 1.66% on the day. It was even higher earlier in the day and even in the afternight session. Now look at, we had this little left shoulder head, right shoulder. Maybe that broke the neckline and we start continuing this move, but keep in mind the candle here. Yeah, we close above the trend line, but we have a little bit of an upper wick. I'm not too excited yet until we get some stronger movement. I need more strength. I need more volume. I want it to get above this 26 level. And if we get above there, I don't see why we can't tag 30 or right around in that zone, 28.50 to 30. That would make sense to me, but I'm not too excited yet. We're above the 50. We're above this trend line. Seen some weakness right here with the upper wick, but the MACD is showing some strength. Dude, if silver takes off, great. But we'll see. The strength today. All the news was around this Bitcoin breakout. We pointed out the ascending triangle. What do you know? We finally broke above that level. And what happens when we get a breakout? Well, we see some strength. At the beginning of the day, I was like, way too much emotion about this breakout. It's pretty basic. By the end of the day, I was like, yeah, well, that was one heck of a strong, beastly breakout. We're at 21,379, up significant amount from, I thought it said the percentage point here. It was probably, 6-7%, somewhere around there. So we broke out of this, and now we're at 1380, 1,400 points higher. Crazy. Strong breakout, negative divergence. I'm surprised, actually, that the RSI didn't read higher than this. So this was a very strong breakout, and the RSI, the relative strength, didn't really move. MACD did cross over, so that's bullish. Honestly, if you missed that breakout and you're buying in right here, you might get lucky and we get some continuation. That can make sense up to 25,000. But, for the most part, I'd start looking elsewhere if you missed a breakout like this, unless if you're, some hodler holding it for long term, whatever. CRB index, this is kind of just a big basket of currencies that's widely tracked. Guess what? We went below the 5 EMA, said the potential for a bull flag. We're continuing this move up higher. RSI is overbought. Very, very slight divergence, but we see some strength coming in here as the dollar's weakening. So is this move going to continue? Well, it might. Let's look at the dollar first. Look at this. Weakness in the dollar today. Super weak. Came down and tagged a low of just about 90 flat, but it was 90.04. Then it started shooting up, slightly recovering. That's a hammer candle on a downward move. That is sometimes bullish, and the divergence is bullish. MACD is, kind of, I think that this is a little bit lower than this low right here, so it's a slight bullish divergence as well. Bullish pattern in bearish context. So we have some bullish ideals in overall bearish context, so mind you, but if we start breaking out of this right now, that would make sense, because did you see where gold was? Did you see where silver was? Gold is running into this resistance, so if we start heading lower here and start heading lower here, wouldn't that make sense for the dollar to start breaking out here and potentially go retest 92 or potentially just the 20-period moving average at 91.50? To me, that makes complete sense if the dollar wants to break out here. But it seems like the Fed's doing everything it can to just make this dollar fall. Weekly time frame, falling wedge, bullish context, overextended to the downside in an area of support. Bullish divergence, bullish pattern. This is going to be one to watch. Now let's take a quick look at bonds. Bonds can continue to just drift lower. So I feel bad for long bonds right now. These are the 10 to 20 year. This is the TLH. You can look at other ones too as well, but just notice the lower highs, lower lows, continuing to draft down lower, which means yields are continually go up. But really, when you take a look at yields, we've been getting compressed at around 1. It's been hard to break out that area. So what happens if we break above 1? Are we going to see a sharp spike, which is going to be not the greatest thing to take place? But as I see it overall right here, when I look at yields, yeah, they're struggling to break above 1, but what are they not struggling to do? Well, they're not struggling to break this trend really either. We have higher lows continually building. So yeah, we get some compression up here at 1, but if the higher lows stay intact, 1's going to break and we'll head higher. It's as simple as that. Unless we start breaking down through these, like the December low right here, or even the November low, then maybe from a technical standpoint, that would show some weakness and then the yields would go lower. Is the curve going to continue to steepen? Is it going to flatten? We'll have to watch it. We'll just have to see. But as I see it right now, everything is trending up. What does that mean? Market's pricing in growth and inflation right now, which is good when you move slowly like this after a big move down. Okay, that's fine. But as soon as we start seeing spikes, buckle up. Things can get pretty crazy. Now it's time to get into the conclusion section. This is where I kind of wrap up my thoughts, where we stand in the market. This is my favorite thing to do, but I want to talk a little bit of something and point out a couple people, okay? First off, people have been calling me bearish, or some people call me bullish. Some people that actually watch the channel and been around for a while know that I'm just more tactical than anything. I'm the wolf. I'm the guy on the sidelines watching what the bears and the bulls do. Robert Kiyosaki says a coin has 3 sides, heads, tails, and the edge. In the stock market, you want to be on the edge, and you want to see what the bulls are doing on heads. You want to see what the bears are doing on tails. And you want to play tactically around that. And right now is the best time to do that. So what did I post? I post this only simply because just to bring in a point home. People have been saying I'm bullish. Here's my portfolio on a percentage basis since November 1st. Okay? When I say I'm out of long positions, basically what that means is, yeah, I'm pretty much out of all my long positions. However, I always hold something in place. When I start shorting the market, it's to hedge my long positions. If you don't short, what you can do is go risk off by 1, looking at various other sectors, for example, utilities or bonds, or 2, you can reduce your position size. So since November 1st, what I wrote here, when I short hedge, it's to protect my long positions. My long positions have been greatly reduced in size because of overextended levels in the market. People assume I catch no upside, but here's my percentage point gain since November 1st. Small caps, up 17%. International, almost 9%. Emerging, almost 9%. Large cap, 7%. Inflation-protected securities, 1%. What did I do with most of my capital? I put it into just 1-for-1 here. Instant government bonds, short term. That's where I park a lot of my capital. So I got to catch a lot of this upside. Now, if you follow me on Instagram, I'll start doing it on Twitter and I'll start posting it here, but I actually post my full portfolio where I show you just, the net worth that's building. And you could see from a year over year, not a year over year, but from the beginning of the year, my net worth is up 60%. It's crazy. Up 60%. Most of that's all paper wealth. That kind of sucks. But, I'm not going to let myself be dragged down by the wealth effect. I'm not going to go spend more just because I think that I have more on a screen. But bet this, okay? Let me follow up with this right here. So what I wrote was the difference between my style and choosing to be just a bear or a bull. Okay, so my style is different. Okay, I'm taking a more tactical approach during markets like this. So if you are on the side of, hey, I'm just a bear, or hey, I'm just a bull, you would basically be saying, hey, I'm only long or I'm only short. Okay, what that does is it exposes you to much more risk. Now, me being tactical player and I reduce position size and you talk about it all the time, but it means I catch less momentum to the upside, not necessarily on percentage base, but on dollar point gain, less to the upside, but I catch way less to the downside. So when volatility increases and just really bullish people get hit, significantly, my downside risk is very minimal. And that's where I make my big gains comparatively to the market. So it's a hard approach. It's hard to do. But just understand that. That's why I brought Michael Guy on. That's why I was so excited to have him on, because he's talking about rotation, risk on and risk off. And he moves his money, moves the fund back and forth like that. And that's exactly what I do. He's not a fan of shorting. He doesn't encourage that. But I like to tactically, move around main positions. That's just my style. All right? I hope that makes sense. Okay? So when there is a correction or a downside move, best be ready to position yourself long or hedge long. But I'll also be ready to capture gains to the downside. And if I don't capture big gains to the downside, guess what I'm not going to capture? Losses to the downside. All right. And then I want to just call this out too. First off, I've been making videos now for quite some time. Not like the longest time, but quite some time. So thanks for everybody that's been supporting the channel, smashing that thumbs and subscribing. But you can go back in the history of all my videos, right? And what I want to point out here is, once again, this right here is creating a lot of FOMO, this move right here. But mind you, I also talked about the topping area right here. I talked about this bottoming pattern right here. I talked about this bull flag that was forming here, but you needed a confirmation move to the upside, and we broke down. When we got down to this level, I talked about the potential move to the upside. That was the more recently in November. Do you remember the videos that I was doing? Look at the seasonality chart. In November, on presidential elections, you get this rip up to the upside. So you had to be prepared for the move, the potential move. And I was not expecting to move like this. But why do you think I was positioned long to be able to make these gains? Just put two and two together here, folks. It's not difficult. It's really not. And if you don't know it's going to move like this, that's fine. No one does. But at least you're positioned somewhat, right? And then I have a stop loss under main levels. So boom, up to the upside, okay? And then we broke out. And now what's this? That was only 4 or 5 days of trading. Now we just been choppy back and forth, drifting higher, undecided, talking about stimulus, talking about vaccine, what's going to happen, this or that, Santa Claus rally, da-da-da. This is all structurally unsound, and it's setting itself up for a potential rug pull. So we need to be very careful here, and that's why I have moved most of my capital out of the markets. I have a little bit there, and now I tactically play short positions, but that's it. All right? So if you're feeling FOMO from this move, and now you're on that trigger point to go long and just push, you might get lucky, and you might make huge gains to the upside. But if you over leverage yourself and something different happens, bye-bye. You're burned. So play it carefully. FOMO makes you do dumb things. All right. One other thing. Transports. Dow Jones, okay? Dow Jones Transports Index. Transports are very, very important to look at because they make up a big portion of the Dow Jones composite. And if you know about Dow theory, it takes industrials and transports. Look at the monthly time frame. The month ain't over, but it's coming to an end. That's a nasty candle. We came above the upper Bollinger Band. That's a bearish star. If we close something like this or a big inverted hammer candle, and then we get confirmation to the downside, we have a complete disconnect from the 5 EMA. That would bring this index from where it's at right now, 12,500, down to 11,750. Easy reconnect. And if we reconnect there, guess what? Most people will be very, very scared. And then you'll start hear everyone saying, the market's going to fall apart. This and this. It's the end of the world. It's going to happen. But guess what I'm going to see? Because I'm already prepared. Previous resistance. Once it's broken, it becomes support. And then I'll be tactfully sound. Because I'll hold stop losses under this point. We tag this area. If that does happen. And then we move higher from that point. We'll see. It's not possible. I mean, I'm not predicting, but I'm just preparing for that to potentially happen. We can continue this move higher. Keep in mind, I'm not outruling that either. That's why I still have long positions. And then, not to mention the semis. Semis make up a big portion of the NASDAQ. This is very strong, but we're really, really overextended. And we're overextended from the 5 EMA, and we're disconnected from the upper Bollinger Band as well. And we have a little upper wick, but it's not nearly as weak as the transports, and that's the one that kind of kills me. Now, from a bullish perspective, talking about semis, I posted a video of doing some technical analysis around AMD. So if you want to watch that movie, watch that movie. It was 4 or 5 minutes. I just did some TA on AMD. It's very simple, but just check out this chart. Let's look at the stairs up. And every time it breaks out of this main area, it just ramps up higher. So to me, if semis continue that move, this looks like just a solid play. We'll see. We'll see how it plays out. That's all I got for you on today's daily stock market brief. Everybody, thank you so much. Hope you guys are having a wonderful start to your holiday weekends coming up. Yeah. See you later.